What is like the most common thing that people are doing with their houses these days that you're hearing?
I think it's the tried and true, right? Like bathrooms and kitchens. Like those are like the things that sell homes. So a lot of clients are either preparing one of two directions. They want to retire soon. And
Hmm.
while they have the ability to borrow and repay that type of anything that they borrow now sooner, then they do it so that they can make that a home that they can age in place with, right? Or it's I'm about to downsize. I want to get the maximum value for my home, and they speak with their realtor too, and they confirm it's like it's a known method for many generations. Do the bathrooms and kitchens, and that's going to give you top dollar. It's not if not top dollar, it's also going to help speed up the timeline from posting it the home for sale to getting into escrow and closing because that's the most important. Because right now, the other issue that I'm seeing is homes sitting on the market for a very long time.
Right. Yeah. I mean, that's a very slept on topic when we talk about real estate sales and transactions. Like the time, the days on market, it signals to the buyer that, hey, this is not as hot as you think it is. Like there's a problem with this property if it's been on the market for 6, 7, 8 months, right? And there's no buyer. Like, what's the issue here? Right.
Oh, exactly, and it's like what's in the hidden in the closet, right? And the
Yeah.
other
Yeah.
big one, actually, like where you're talking about renovations, it's
Hmm.
actually an ADU. Like I'm seeing a lot of opportunity in like LA County or north of it, even bleeding up into like Central California, where people are now redoing the math and finding good deals and making them
Hmm.
exceptional by adding an ADU.
So, what is the ADU for people who don't know what ADUs are?
Like you can think of like a tiny home on your lot. So like in California right now, they allow you to have a detached or attached addition where you have another, like technically on your single family home or duplex, you can add another building, a housing unit.
To
And it's
make a
called
triplex,
ADU.
essentially.
Yeah, basically. And you can convert your house, single family home into a duplex without being a duplex, right? They made it so that the loop, there's less like rigors of trying to get your home approved for plans. So they standardized it with what they call an ADU, which is an additional dwelling unit on your home. So people, so this one house I've seen, they actually went from house to ADU to JADU, and then they converted one living space inside the home to an attached JADU. So she had turned her single family home into a 4 unit.
What's a JADU? Is that a junior? Is it smaller than a regular ADU?
Junior ADU. So though you can technically build a detached junior ADU, a
Uh-huh.
detached ADU, and also have a inside the house like converted JADU. So you can have 4 houses basically on one lot in California.
That's
But she's smart. She's
cool.
like, I'm doing this on purpose. So this is my retirement ticket. It's gonna replace my income. And she's like, the back ADU, the full size one gets about 2,800 a month. The junior one gets about 2,200 a month, and the garage
Oh,
conversion gets like two
wow.
something a month. It's like I haven't paid my
Wow.
mortgage in years, right? And she's like, and once I'm done with this one, after I've seen this work, I'm gonna rent out the main house for 3 grand, and I'm gonna buy a new house, and I want to do it again. And I was like that, and I was like, I'm like, you did this in California, like your house is, and she's like, yeah, I got a recent appraisal. It's like worth 2 million bucks.
Wow. It's like you're making your own apartment complex.
Basically. So, like, when she got her recent appraisal done, and she told me, she was like, it's like $2 million." She's like, "I made this house that I bought for 900 grand, $2 million
Yeah, because of the income. Yeah,
because of
generating
the income
property
coming
now.
in, and
Yeah, yeah.
like obviously the improvements on the property, right?
That's super cool. That's super cool.
It's called subject to. They'll buy that property subject to keeping the existing mortgage that's in place. So the person may be distressed. I'm looking at a listing right now that I see in Texas, right? And it says current sale price is 290,000. Remaining mortgage is 277,000, and the HOA is $50 a month. There's no balloon. The interest rate's at 5.75%, and they say entry fee $12,500 plus closing costs. So they're saying like, "Hey, I'll sell you this house with the subject to of I'll still keep the mortgage in my name, but you own the property, and then you have to pay me a difference, and that entry fee is 12,000 bucks." Because the seller's like, if I sell the home traditional way, I'm upside down anyway. I can't sell the home, so they're like,
Mhm.
take over my mortgage, 5.75%.
I've heard people talking about this online. There was this guy who was like a wholesaler, a real estate wholesaler.
Yeah, that this is like there's so many of them. There's so many of them. There's thousands of them. Like,
Yeah. So this
it's
must be illegal. This is a legal
it's
activity, but there's some sort of loophole.
I can't speak for the mortgage servicing companies because technically, if they
Hmm.
found out, they could call the mortgage due, and I'm pretty
Mm.
sure they do find out too that the ownership changed or something updates, and they're like, "Who the hell is this?" Right? Well, it's not Jason Kim on the deed anymore. Why is the insurance that's escrowed saying something something rental company LLC? So it's like you never know. Like sometimes people get smart about it and they just transfer it into an LLC, so it looks like, oh, it was an investment property to begin with. They just moved it into LLC, and the servicing company may never know, and you get to proceed with no repercussions. But it's like a gray area because it's like if they find out now your mortgage is due, right? It's been sold to a new owner, a new entity that has no relation to the LLC potentially, right? And it's a risk. And then, like, what if the new buyer that buys it and you're the owner that has the subject to mortgage that you're still responsible for? Because if it forecloses or misses payments, now your credit score's shot. It's interesting. Like, and it's been around for many years.
I was explaining this to some people like, hey, I saw this content and I saw a wholesaler making these deals. Let me take over your mortgage. And their response was, how? Legally, how? Right. And I was
Technically, you're not
thinking about it
supposed
like,
to. That's not the traditional way to do it, right? You
yeah.
sell, clean the slate, go through escrow and title, put a lien of it on of your own on it, and then proceed, right?
Yeah,
But then, like,
because the mortgage company is whoever's paying the mortgage, if they default on that mortgage, the mortgage company can go after the home.
it's still tied to that property. It's just who's the person they're going to be going after. It gets legally, it's confusing. I'm not an attorney, so it's just dirty. It doesn't mean the lien never goes away. It's tied to the property, no matter what. So it's a clouded title. So they'll fight with attorneys to keep the mortgage in place, or they have no choice but to refinance it to
Mhm.
take on that mortgage liability now as a new owner, or they sell it.
For anyone watching this, if you are familiar with the topic that we're talking about and you
Subject to.
yeah, subject to if you're familiar with this topic, please write in the comments where we are wrong about this and how this is legal. How people are actually doing this because it's very fascinating. And I think a lot of people could benefit from this, this kind of like loophole in the system if it's legal, right? Maybe there's something in the contract where like, hey, like if
And
you default, then I get the house back or something, and then I
it
have
might have stuff like
right. So
that.
is it kind of cascades down the liability back to the original owner and then back to the bank if anything defaults. So thanks for watching. Subscribe for more videos just like this. But before you go, help us grow the channel by giving the video a like and a comment, or share it with someone that you know. And if you want to watch the full video, you can use the link on the left. Or if you want to watch more clips like this, use the link on the right.